But I want to put out some
reality
numbers.
Check. Ab de do.
But Nimesh, the point is we've been kind of slowing down in terms of returns for a while, and now we are. It's just coincidental that you're coming to a point which is H2 of 2025, where any case expectation is that all of this Trump tariff tamasha which has happened will now finally start to really show up. So far, it has actually not shown up, right? So India has been slowing down on its own account. US, etc., has been doing very well. So you are now, after coming to a point, already slowing down, where now perhaps in the US also this will start to show up. And actually, the graphics will come up for our viewers. There are two reasons why many are saying this will show up now. I mean, these tariffs have become reality. Because at some level, people were kind of wondering whether ye hoga, nahi hoga, really 20-25%. Right now, looks like it's going to be 20%. Average tariffs are now, most economists are saying between 18 and 20%. There are two reasons. One is, before these tariffs hit, there was a lot of front loading into the US which happened, right?
Yeah.
So basically, they didn't have these tariffs, so consumers didn't feel any impact. So no inflation and sentiment, etc., was higher. Second is that companies themselves did not know what's going to happen. And I spoke to, for example, Raghuram Rajan and a few others who are there in the US. The companies they have spoken with saying we're waiting to see where these tariffs settle at. So they did not increase prices. Now that they also see this is going to happen, they will start to pass some of these prices on. So my short point is we've been kind of suffering without the globe. I shouldn't say suffering. We've had 3-4 good years, but we've been slowing down. And now maybe the world joins us, Prashant. Is that
I would say more than slowing down, I'd say normalizing. The past 3-4 years weren't normal. 20% return isn't normal. If you look at last 20, 30, 40 years, so an average out and adjust for inflation, obviously in the 80s and 90s, inflation was a lot higher. So the nominal GDP, the GDP deflator was higher, hence nominal GDP growth and corporate sales and profits were accordingly higher, and then hence the return a little higher. But if you look at last 20, 30 years, the returns are in line with nominal GDP more or less.
Correct. So in India, dollar returns are, I think 12%.
Depending again where the starting point, if you start March 20, it's very different from December 20 or March 20.
No, I'm looking at 25 years.
Yeah, 25
Last 25 years, it's 12, dollar returns is 12%.
So that's a little